Nvidia shareholders, oh my gosh, you have made some massive gains this past week. 16.4% this week alone, 128% year to date. Now, the question is, if you're not in it, should you be getting into it right now? Should you just wait a little while? And if you're already in it, how do you manage the position going forward? We're going to talk about all of that. Plus, make sure to hit the join button down below. You're going to get all of my stock market research each and every day delivered to you. Hit the join button below and support this channel. Now, Nvidia has managed to do in the past week what Tesla did the week prior. I mean, this is an amazing move that we have seen out of Nvidia. Now, this candle here on Friday came on a lot of volume. What it was trying to do initially was continue the rally from the day before, and actually the 7 days before. It's been on a 7-day winning streak and has been higher 11 out of the last 12 days coming into Friday. And as it pushed higher, it wasn't able to break through the previous day's highs and sustain that move. Instead, it fell back on itself and finished red on the day. Now, typically I would be very nervous about that. That shows you possibly that there's a top end on the stock, and maybe there is. But if you look back at the Tesla trade from a couple of weeks ago, on the 26th, we got the same exact candle. And I was a little bit nervous then, but look what it did. I mean, it continued to push higher, not necessarily because it warrants that kind of valuation, but because the stock had so much euphoria and so many people wanting to buy any kind of a dip, even if it was just a marginal dip, that they were willing to buy it and continue to push it higher and chase it higher. So there's a possibility that next week we see a very similar reaction, that the longs will want to get into the stock and continue to push it higher. Now, that's outside of what might happen with the general market conditions, the semiconductors industry. There's a lot of other things that go into it, but just looking at it from the Nvidia stock itself, that's a strong potential going forward. And I also think too that this red candle here is a sign that maybe it's just some of the early profit takers getting out. Perhaps they've been long from $40 or $50 a share, and they're saying, you know what, Jerome Powell, he's talking about raising rates next year. We're already in the middle of tapering. The NASDAQ is up 10 days in a row. The S&P 500, it's overbought. You're starting to see a little bit of a rotation, perhaps back into the small caps. Maybe this is my time to go ahead and get out of Nvidia. And so you had some profit takers there on Friday that did exactly that. But that doesn't necessarily mean that it won't continue to go higher. However, if you're a person who hasn't bought into the stock yet, is this the place that you want to get long at? Well, where would you put the stop loss at? I mean, you can't put the stop loss below this point here on the chart. That's about a $25 stop loss on a $300 chart. And there's really no basis for putting it back there. Let's say you were to put a 15% stop loss on it. 15% is a lot for a person who's swing trading. It's a lot. And if you're willing to risk 15% on the trade, then you have to ask yourself, what kind of reward am I really hoping to take away from this kind of a trade? And if you're looking to make a trade that justifies a 15% risk, then you really need to be making 30 to 45% on that trade. That would give you 2 to 3 times the amount that you're risking. That's what you got to do as a swing trader. You need to make way more than what you are risking on the trade. So 45% of additional gains from the current price isn't realistic considering the kind of run that it's already been on. Again, up 128% year to date, 16% in the last week alone. Those kind of moves are going to be very, very hard to duplicate going forward. So as a person on the sidelines, what I would be looking for is perhaps a move back to this support level, going back to March of this year, February, March of this year. If it can pull back to that level, maybe it's around the 260, 250 area. And then you can play that bounce off of support or potential bounce off of that support. Doesn't necessarily mean it will bounce off of it. And if that doesn't happen, then there's more support down below that you can play off of, but at least your risk is contained. You get in at around 260, you put a stop loss at 250. If that doesn't hold, you're out $10 a share. But if it does hold and it goes right back up to all-time highs, let's say it goes back up to 300, then you made about a 4-to-1 return on your trade, and that's phenomenal. And 4-to-1 is really good on any kind of a trade. Yeah. Do that, you will be going places. But trying to get 3-to-1 or 4-to-1 when it's trading way up here at $300 a share almost, it's just not going to happen. And some of you guys might say, well, this stock is going to 1,000. I'm willing to wait for it. Guys, if it goes up to 1,000, it's pretty much worth the same amount that Apple's worth. That's just not going to happen anytime soon. If you're a swing trader, then you got to trade in the time frame that swing trading requires you to. And that's usually from a few days to a couple of months. Yes, maybe Nvidia gets to $1,000 one day, but that's not going to happen in the here and now. That's more for an investing standpoint. And we're talking about Nvidia as a trade. But now if you're in the trade already, then what are we really looking for here? Well, definitely you want to start looking at tightening the stop losses. You also want to start looking at, okay, is there opportunities like what we saw on Friday from a lot of investors to start taking some profits off the table? For me, I like to scale out of my positions, and I think it's a good way to go about your trading. And here, after this kind of a move, not too bad after a 16% week to start taking some profits off the table. But if you're still long on it, or if you're just looking for an exit strategy, then watch this 5-day moving average here. It's this yellow line. And this yellow line has not yet seen a break below it on this current run. Now, it can break below it just as we saw back on the 21st of October. It'll break below it on an intraday basis, but it doesn't close below. And so that's what we're really looking for, is for a break below the 5-day moving average. If it does that, then that would be my signal to get out of it. Right now, it's very much disattached from the 5-day moving average, which gives you a lot of room to let the stock run for now. Now, the 5-day moving average will start getting quite steep in the days ahead. You'll probably start seeing it get up to $286 and $290 on the MA. But the key is going to be, does it close below the moving average? And once it does that, then that's where I would be, from a swing trading standpoint, looking to get out of the trade. And it's not just Nvidia that I do this with. I do it with a lot of trades. I always look at, where is there some support with the moving averages? Sometimes it's with the 5-day, sometimes it's with the 10-day. Nonetheless, I like to look for where there is some precedent of a stock showing support at a moving average for deciding, when am I going to start taking profits? When am I going to start moving out of the trade? Tesla, again, we look at that. The 5-day moving average has held very well for it. If you were following that, you didn't get shaken out of this candle right here back on the 26th. Instead, you were able to ride it higher, and still to this date, it has not closed below the 5-day moving average. So the 5-day moving average is not something magical, okay? It's just showing you that there is a history of it following that 5-day MA. And when you see that history, it's a good guide to use for going forward, for deciding when are you going to get out of a trade and start booking profits. Now, let's talk about the takeaway. A lot of euphoria in Nvidia. Again, massive amounts of gains here. There's no doubt that this thing has rocketed itself up to Mars over the past year. But that's not necessarily the time to start getting long with once it starts colonizing Mars. You kind of want to wait until it gets back into Earth's orbit to start getting long again. So it does need a pullback to support if you're looking to finally get into Nvidia. Right now, it's not anywhere near a support level. It's just taking off. If you're long on the stock, you've got to start asking yourself, okay, what's the line in the sand? If the stock starts to work against me and we start seeing massive amounts of profit taking, let's say the NASDAQ has a big sell-off. SMH is up 18% in the past month. So we have to start looking at, okay, where are we going to take profits at if the market starts to see a big mass exodus? Because what you don't want is to be way up on a stock and then to see all those gains evaporate. You always have to be forward thinking. And so if you're long on the stock, start looking at things like the 5-day moving average. Maybe you have a longer time frame and you want to use something like a 20-day moving average or a long-term trend line. That's fine too. But know your plan to get out. And if you're not in it, show a little patience. If you enjoy this video, make sure to like the video and subscribe to the channel so you know that each and every time I post one of these videos, I'm going to start live streaming this upcoming week. So keep an eye out for that. I'm going to be taking your questions and your charts, and I'm going to be going over them, and I'm going to be helping you guys out as much as I possibly can so that we can all experience a little bit of success in the stock market. Thank you guys, and God bless.